What's up? Good morning and welcome back to another edition of Money in Motion here. Day 2 with the new set. It's pretty vibrant, still getting used to the race yellow, but let us know what you think below. Monte, interesting day. DXY really punishing a lot of interesting other assets. So I want to talk about kind of the ripples of how the DXY has kind of moved other markets, Forex and metals, namely. Equities don't seem to have any trouble rallying with the DXY up almost 1%. We had some earnings from the likes of like Meta. Who else do we have that's up today?
We got Google up another 2.7%, Nvidia up 3.3%. Meta, obviously, like you said, up 8.2%. Amazon up about 3.1%. So across the board, tech stocks up pretty big. And like you said, CJ, that's in the face of a strong dollar. And actually, I did want to talk a little bit about that. But if there's anything you'd like to start with.
This could be an interesting debate between dollar and whether equities can rally in the face of dollar going up. Not that it really matters to debate, but I think it's interesting to have multiple perspectives. But yeah, go ahead by all means.
Okay, so I just want to make the case. So you had mentioned that, and we're seeing it today too, right? Where DXY is ripping to the upside while equities are actually showing risk on price action. That's something we ordinarily don't see, right? When we talk about the DXY, we talk about it as a gauge of risk. When it's going up, people are moving out of risk on assets and into the dollar. When it's moving down, people are injecting their dollars into the equity market. It's a pretty simple concept. However, last week, we saw a bit of a break in that relationship. And I would like to present an argument as to why I think that occurred, why we were able to see positive price action in the dollar and also see many of these big tech names continue to rally. Things like Google, things like Nvidia, things like Amazon, things like Apple. Despite the fact that we had DXY rallying, you'd expect those stocks to be turning down, right? But that wasn't the case last week. And my reasoning for this is pretty simple. When in the last 4 years have we seen a time in which the DXY has seen an extended period of downward price action to this extent and velocity, also marked by a week that was followed by earnings in all of the major tech stocks? So you had this mix of, yeah, sure, the DXY was incredibly oversold, and I think people recognize that anything below 100 and it bounced from that level. So we saw the technicals play out in the dollar. As you can see here, that $100 level held up really nicely. And today we're getting this very nice bullish engulfing candle that's propelling us higher. And I think that ultimately this will translate back into risk off price action for the equity markets if we see the dollar continue to rally, because now we have a lot of the earnings behind us. Not all of them, some of the crypto related equities like Mara and Riot still have earnings, but with things like Microsoft, Google, Tesla, Meta today, like all the big earnings catalysts have occurred, and FOMC yesterday as well. So it was the perfect mixed bag of, opportunity for us to see this correlation breakdown between the DXY and equities, or, I should say inverse correlation breakdown. Now they're moving together, but I don't think that's going to last. And I think that now that we have earnings behind us, we have FOMC behind us, the dollar looks to be showing genuine strength after what had been a historic period of weakness in terms of both, you know, uh, amount moved and velocity moved. I think we see some strong moves in the dollar in the next couple of days here, and I think that translates into some risk off price action in equities. Now, of course, that hasn't happened yet, but I do still think that that's going to be the case ultimately as we finish off the week here. But CJ, I know you may have a differing opinion on kind of the DXY and its relationship with equities, and I would love to hear it.
Yeah, so for me, I mean, I think the DXY is going up for two reasons. One, because the sentiment and there was a ton of shorts, but the catalyst to squeeze those shorts, in my opinion, was ultimately 25 bip hike or an increase of rates. And so that's the reason to me why you're seeing things like dollar go higher, metals go lower. But, if you look at the equity market and you say the argument, equities are going to have a tough time going up in the face of rising rates, like that kind of view has been, equities haven't had a problem going up as a result of rising rates throughout the entire year. So do you think that's kind of just the same type of argument? Because that's why I see the dollar going up so much today, was just because of kind of a reaction to FOMC and rates. We'll see. We'll see. I mean, maybe I'm just blinded by the fact that these tech stocks have been going up for so long. And so then I think they'll continue to, but I don't know. Everybody's like, it's funny. I hear this statistic all week. It's like the Dow's got 13 winning days or 14 winning days. That hasn't happened since 1987. Therefore, we must be in 1987 repeats. So I don't know. I think there's a case to be made for both. I think the truth is probably somewhere in between. Or maybe Monte is just right. I don't know. We'll see.
What are you trading, my friend? I know you had been looking at all sorts of different things, the grains, the beans, but also, some crypto assets as well. Anything in particular that you would like to start off with, provide some insight and analysis on?
Yeah, let's talk about the most interesting thing, which is just a reaction to the dollar and how it's kind of, like I said at the start of the show, rippled through various other asset classes. Okay, so first and most notable to move, I would say, is silver as a result of this. So one thing that we went back to and talked about, I think, on Monday's show, and I'm not trying to say that I was going to predict direction or anything. Just because people are net long doesn't mean price has to reverse. This is not a predictor of direction. However, what it means when you have 78% of clients long and only 22% short is that when everybody bought the dip here, if price is unable to continue to go up higher, or if, like, for instance, we do have some adverse move in the dollar, then all of those traders, all of those longs are essentially going to be forced out very violently at that. So if you look at the 15-month chart, it was just avoiding something like this, I think is worth using COT data, because it happens so fast. If you have a large position or a large long, you're basically caught. You can't get out. And so this is just an example of how crowded trades can really have adverse price action, if they get forced in a particular direction.
Yeah. CJ, you mind if I pose a hypothetical to you? First and foremost, I'd like to give you your props because you had been kind of signaling that was a possibility all week, that, silver traders were heavily positioned to the long side. Do you think we would have seen, or hypothetically, let's say the dollar doesn't go up today?
Love the hypotheticals. Okay.
Yeah, we're entering into the realm of hypotheticals now. Let's say the dollar had a weak day today and continued, headed back down towards that $100 level. Do you think that silver squeeze wouldn't have happened today, and that we'd still see silver grinding higher despite the positioning? Or do you think that the positioning is really the main catalyst, then DXY is kind of secondary to that?
I would actually say the DXY was probably the like ignition to the positioning being like the powder keg,
Yeah,
if that makes sense. Whereas you just need a match or some type of catalyst to get it going. So yeah, I mean, there could have been a different catalyst. There could have been something else that happened. It could have, more longs could have come in. Speculators can always get longer, even if they are crowded. So,
true.
yeah, probably not. But, there could have been a
Yeah,
different catalyst that came along if we're going to
yeah.
venture into the realm of hypotheticals. So,
And I love the analogy. Like that's kind of what it's all about. Is like we don't know what the match is going to be, but like we can identify the powder kegs.
find where the powder.
Yeah, find where the powder kegs are stored up, irresponsibly in a warehouse. And that's when like the longs are piled up. You can think about the longs as being like each long trader is essentially a keg of powder, and every time they enter a trade, they're all entering into the same warehouse, and then once that match strikes, it's going to be a chain reaction, and that warehouse is going to go up in flames.
Well, yeah. I mean, or you could go to this analogy. It's like you get everybody packed into a movie theater and then you're yelling fire and everybody runs for the door at the same time. Not everyone can get out, and markets are okay. Let's move on to
Well,
more.
wait. Before we do, allow me to make my first Simpsons reference on this show.
I
Mr.
think,
Burns,
well, money in motion. Money in motion. Go ahead.
Money in Motion. It's about Mr. Burns, the richest man in Springfield, Charles Montgomery. But he he has this disease where essentially they call it the Three Stooges disease, or you could call it the fire exit disease, where he has every single possible disease and they're all trying to infect him at once. But because they're all like trying to get through the door at once, he's basically immune to disease. And he finds this out, and he thinks he's like immortal. But that's what it reminds me of, is like, traders rushing for the door. Is sort of that Monte Burns disease scenario. He's the only person on the planet that has it, according to Dr. Hibbert. But anyways, let's get back to some more serious stuff. How about the
40 seconds of my life? I'm not okay. All right. Moving on. Let me just hit two more assets, then I'll pass it back. I'll make these very quick just because these are things that I was trading around. Yeah, so I've been looking at wheat, or not wheat, oats. It's all the same stuff.
what? Yeah, wheat versus oats. Like, I honestly don't. If you put them both in front of me, like, I probably wouldn't even be able to tell the difference. I guess I would. Oats are what horses eat, and wheat is like grass. But the price action, not the same.
Yeah, the price action. That's all we're looking at, really. Price action, positioning, and a little bit of technical analysis to go along with it. So, just some basic things we want to highlight. Looking for powder kegs. That's basically what we're doing. You have a lot of retail longing into this uptrend. You see the yellow. You also see a massive commercial distribution with the commercial movement index down here. Jeez. So this is a crowded trade in terms of longs for oats. So, we'll see. It's kind of tough to get a news failure on certain commodities like this. Also, like with coffee, which I'll talk about in just a moment. But I mean, maybe it's time for a short on this.
How would you position yourself, CJ, if you were looking to get short here? Because I agree that this could be the time to take a shot at it.
Yeah, I mean, you're looking at a stop loss of, basically the recent high. I wouldn't want to force anything here because, like I said before, specs can always get longer. But I think you've got clearly defined risk. I think if we close, with lower momentum today, not necessarily closing red, but just kind of like how we are now, maybe around the 440 range. That's something that, I'd like to see. Remember at the start of the week when we were talking about, trends that you want it to show you something. You want to show a little bit of technical reversal before you get in. To me, maybe it might even be, worth waiting for, the loss of a particular moving average here. Like maybe not that, but maybe like a Bollinger Bands. We are kind of already losing it. Yeah. I mean, I am in a short here. And basically that's how I would size it or risk it. As long as we don't run these highs, then this could have been the high here at roughly, 470, but we'll see. As for coffee, it's coming along. Like I said, it's giving a little bit of technical strength. Depending on today's close, that'll be interesting. But battling back and actually seeing some reversion after yesterday's sell pressure is a pretty good sign. This is another one which trend followers have just hammered to the downside for the past few months, and you're starting to see the start of what looks like short covering. And then I do want to show, and this is the thing with oats that you got to be kind of careful with, is that these things can trend like forever. Like I think a couple months back, I talked about shorting cocoa. It's been a crowded trade for a long time.
But there's no match.
It's relentless. Yeah, it's relentless. There will be evidently, or eventually, right? Like it can't go up to infinity. And if you look, I think this is the highest price it's traded in since 20.
Wow. 2011.
Man, look at the 01 to 02 cocoa bull market. No one ever talks about that. Anyways,
with that, there's like 5 traders in it.
Yeah. So that's kind of just my point. It's like, while these trades can get crowded, they can go on for a very long time. So it's very important to, one, not bet too much, because if you do catch the reversal, like in something like silver, even if you only have a small amount staked on the trade, it's, winning is still going to make up for it. And, if you're going against the trend or you're going against crowded trades, it's probably only going to work like 35 to 40% of the time. I mean, I guess you could probably say that about many trades, but you just kind of got to go into it with that perspective. But that was a lot, Monte. Love to pass it back to you and hear what you think.
For sure. Yeah, I'm going to just quickly cover some Bitcoin stuff. Not a whole lot to talk about in crypto world, as we are kind of teetering, right at this right below this 30K level here. Relatively boring price action. When I look at the trade, the chain dashboard volume was down pretty significantly. So that's not too surprising given the fact that we're seeing tech stocks rally as hard as they are, with Meta up 8%. Although we'll see if it can maintain these levels. That's yet to be seen. But I mean, things like Google are rallying hard. Things like Nvidia continuing to make the move. Things like Amazon looking strong. Apple, new all-time highs. Like, there's just no reason why, if you're a crypto trader or if you're someone who wants exposure to risk on assets, which is what Bitcoin, is, there's no reason to be buying it right now. There's just no signal to buy in terms of relative strength, in terms of uptick in volume. Your money's better served elsewhere. And I think that's exactly what we're seeing, is people place their capital into things like the crypto-related equities. We've talked a lot about this in the past. But that's where the majority of the price action is occurring. What's going to be interesting to me, CJ, is what's going to happen if we get a reversal in these big crypto-related equities. Will that lead to a crash in Bitcoin, or will we see some of that capital rotate back into Bitcoin? I think more than likely we see a bit of sell pressure in Bitcoin alongside the crypto-related equities, just based on the fact that, like we talked about yesterday, if you're a big hedge fund and your clients want exposure to Bitcoin, like, what are you going to do? Are you going to go on Coinbase and buy 500 Bitcoin? No, probably not. You're going to likely get exposure to the space through one of these vehicles that is publicly traded, like Mara, Riot, or Coinbase, or MicroStrategy, or even Galaxy. But that being said, These stocks do have earnings coming up, and I think it's going to be very interesting to see how they, not only if they beat earnings, but also their reaction to earnings. People have been very long. It looks like there's some de-risking heading into the earnings of a lot of these assets. But if you look at this price action, I can't imagine that Riot would have, negative earnings, especially when you consider the fact that Bitcoin, since their last earnings report, which was on Thursday, the 4th of May. Let's see where Bitcoin was trading on Thursday, the 4th of May. So it was trading around comparable prices, actually. So really, you could expect comparable earnings for Riot. Like if they didn't make anything, it was distributing up here, and that would contribute to their earnings. And that's maybe why we saw some sell pressure up here. If they did distribute up here, then they're likely to beat earnings. I think they probably will beat, and we'll see a bit of a pop, and that could be kind of as we've sticking with the metaphor, the match for Bitcoin that kind of strikes and allows us to climb higher back up towards this 31K range. But I still think that like the canary in the coal mine is these crypto related equities, and watching them tells you whether or not you should be taking a shot at Bitcoin. And right now they're telling us, hold your horses. Now is not the time to be taking a shot. It's a bit risk off, and that in conjunction with, a strong dollar and the catalyst of earnings kind of looming overhead, lots of question marks there. So with all that being said, Bitcoin is set up for an interesting week. And I think it's really as simple as if we see some of these stocks miss earnings, Bitcoin could get hurt hard. And by that, I mean a move down towards 25K. If we see them beat earnings, then we see Bitcoin show some risk on price action and perhaps a move up towards 32K. And essentially, we'll find out in a few weeks, Wednesday, August 9th for Mara. MicroStrategy is a little bit sooner on the 1st. Coinbase is the 3rd. And Riot is the 21st. So all of them in August. All of those will be very critical to the price action of Bitcoin, and I'd be watching them very closely because clearly that is been the means of exposure for many major funds and institutions whose clients want exposure to the Bitcoin space. But do you have any thoughts on those crypto-related equities as they kind of approached their earnings season? I know you'd been long Coinbase. That had been a really good trade, but anything else in particular with those equities that you're watching here?
Yesterday, I took Coinbase off the table entirely, even though I do believe in it long term. I just think that, what Horst was saying on like last week, and when you think about like Bitcoin in the cycle from not necessarily a price perspective, but from like a timing perspective. We talked about this yesterday when we brought up the stock to flow chart. I'm hoping, which is not a good strategy, but I don't have any exposure, so there's no risk. My only risk is missing out on a move to the upside, which, like, let's say, for instance, Coinbase has insane revenue because of XRP and, the Bitcoin on its balance sheet appreciating and so forth. I hope they don't pull like a NVIDIA and like totally price me out and go up, 20% after their earnings. I don't think the chances of that are likely. I think that the earnings, you have to imagine they're somewhat priced in for most of these companies based on maybe a little variation in how each individual company operates. But all these earnings are probably going to be good. There shouldn't be a reason why there's not. So we'll see. But yeah, I mean, I've been looking to get coin down around 90 to potentially 80 and maybe even 70. Just kind of got to watch for where strength and where a bid kind of comes in for that asset. But, as of now, there's been assets in the past where, like I rode them up, was up a lot and just was stubborn and refused to sell because I thought it was the future or thought I was a believer or whatever. And the first step to losing money in markets is to become a believer of anything. You should be agnostic to any type of asset. I don't care if it's Bitcoin or Apple, anything. Nothing is like. Anyways, I digress. Hopefully we can do things a little bit cheaper. But I mean, look, even if my risk is that, Coinbase goes back to 110 and I don't have any exposure, that's basically my biggest risk here. And if it doesn't, if it goes to 80 or, 70, I can buy 60% more the amount of shares that I originally had. So, and then just look at that from a longer term, like time frame. So I'm not really, and I don't really have to do too much right now. It's pretty simple, I think.
Yeah, I agree. And I strongly encourage you to not look at like, you taking profit on coin and then it moving as risk, right? You were de-risking. So like you took money off the table. That's never the wrong move. Like you de-risk there. So what you did is essentially like eliminated a lot of your risk by taking that money off the table. And yeah, of course, you may miss out on some opportunity costs, but you can't catch every single trade. There's going to be trades that you miss every day.
But the Coinbase one is for me a big one. Because I think if you're looking at it from a cycle perspective, as the institutional magnet for capital or whatever, it is somewhat of a one-way bet in that regard. But taking risks off the table, sometimes you got to do what you got to do. So,
agreed. Well said. Let's end with this. Good question from one of our OGs, Kevin. And this is a pretty interesting one. Can you overlay Hershey with cocoa?
Yeah, sure thing. Hershey is like the best charts ever. Wait, is it?
It had earnings today, and it beat on the top, lost on the bottom, but is nonetheless reacting very positively.
Oh, that's right. We had noticed it was.
Yeah. Kevin actually had talked about this. Maybe he was back in the Market Rebellion community. I forget, Kevin, when you mentioned this first, but
we're gonna go with a couple. All right. We'll put on cocoa, but I want to see a couple different charts here.
Do your thing.
I'm putting together the
PepsiCo. Look at this.
The sugar ETF. Yeah, we'll put sugar on there too, because that's another up-only chart.
And also very important to Hershey.
All right, hopefully this is not too cluttered.
It's looking a bit crowded, CJ.
I mean, they're all going up.
Yeah, wow. Where's Hershey?
Hershey is black. That was the original one.
Okay.
Yeah, all right, my bad. I ruined
this. Overload. That was a good effort. Appreciate the ambition there, but I think you may have overshot with the assets that you're looking to see the correlation with there. It's getting a little hazy.
All right, yeah. So Hershey, I'll make it a line now. Hershey blue, cocoa, the cocoa bean in purple.
Wow.
I don't know anything about Hershey. I mean, I assume they buy like options on cocoa to get their, locked in price. I know that's 100%. How like UBC, they would lock in uranium barrels, a year in advance or whatnot. So I really have no idea what this means for the fundamentals of Hershey. I just know Hershey has been a really great stock in terms of growth. So yeah, this is, I mean, if you were to just if Monte was to just buy what he does every day, McDonald's, Hershey bar, Diet Coke.
Why do you think the stocks are pumping? Because I'm buying them. Because I'm buying the assets.
You and every 300 other million Americans, yes.
Yeah, exactly. So yeah, thanks for pointing that out, Kevin. That is definitely one of the more interesting correlations in the space. But yeah, I mean, you can guarantee that Hershey's hedging with, buying some options contracts on cocoa. I mean, even small companies do that. Like the company my mom works for, they sell like workbenches and steel materials. So like companies like Amazon, for their warehouses, and like they'll buy steel futures as a hedge, like just in case like price goes up or goes down. So they have someone on staff that does like strictly that and manages their position, and they're a small company of like 50 employees. So you got to imagine that Hershey is pretty well hedged in the cocoa market, as that is a large ingredient in their secret recipe of their Hershey bar. But good stuff, Kevin. Thank you for that. Really appreciate it. And thanks for that breakdown, CJ. Anything else you'd like to add before we wrap things up today?
No, that's it. I think we covered the gist of it. Should be some interesting volatility. I'm excited to watch how the DXY moves around for the rest of the day, but seem to be getting a little bit of profit taking in equities, things like Meta backing off just a little bit. So we'll see how that one ultimately shakes out. But yeah, hope you guys enjoyed. Don't forget, check out tradethechain.com for crypto sentiment indicators and a 14-day free trial. Hang out with Monte and I and Nick and Alex and a bunch of other of our friends in our crypto Discord at tradethechain.com. So looking forward to seeing you guys there. And till next time, we'll see you later.